Yeah, Amazon shares sliding, of course. They beat on earnings. Everyone always beats on earnings, but the outlook wasn't great. And particularly just like the bread and butter, e-commerce, sales, online sales, not that great. Some of the other stuff, AWS, advertising, these are still big money printers. But, you can see down 6%, online sales, weakest growth since the start of the pandemic. So a lot of that transition, that huge boost that they got, starting to fade. For more, let's bring in Bloomberg MLive reporter Kriti Gupta. Kriti, what stood out to you there?
I think this is so interesting that's falling right on the same day that we got a lot of that eco data out, because it's telling the same story, really. You had this massive roaring consumer, but at the end of the day, the shift is, like you said, from goods to services, and that's really showing up in Amazon's earnings. What's really stood out to me here, though, was that their numbers actually missed estimates. You haven't seen a tech company do that in quite a few quarters.
Who misses anymore?
I know, right?
Interested on its monthly active users, but maybe not its numbers.
I guess not. But what's interesting here is that Amazon in particular, it missed on their net sales, it missed on their forecast, which is so crucial because you're starting to see Apple, Microsoft, Alphabet really have these extremely high expectations that they had to meet. Facebook was down yesterday, even though they actually met their daily average kind of user count in addition to all of their revenues and beating that, and still those shares were down. So this is a kind of a bloody sell-off for Amazon. You just can't miss anymore in this environment.
Yeah, a 6-7% drop on Amazon is huge if this holds into the cash session tomorrow. But I am curious. This is a company coming off of 30-40% revenue growth per quarter for the last few quarters. A lot of that driven by the pandemic. There's only so much stuff you can buy, right? And Caroline kind of alluded to this in all seriousness, the idea that now people are focused more on going out eating, going out traveling, and spending their money there on those experiences that were, I guess, were popular before the pandemic as well. But how does this change, I guess, the dynamics of how you price in Amazon, how you price another retail stock, an Apple, or anything else that sells these sort of physical goods that maybe people just don't need as much anymore?
At some point, though, you have to understand, what is Amazon actually, what's their business? Because Apple beat on those, on kind of all fronts, their iPhones, their Macs, their services, and you saw them do it, really just blow out some of those analyst estimates out of the water. And those are luxury products. So their global kind of exposure actually kind of served them well there. For Amazon, what's interesting is that their net sales is what missed estimates. Their forecast for net sales is what hit kind of their end product. And remember, they also have a massive shipping and distribution network. This is something that a lot of people don't look at, because you have UPS, for example, you have other shipping companies that have already kind of peaked a little bit. You've already seen their shipping volume kind of drop. And now Amazon is saying, well, our net sales weren't as great as people thought they were either. Could this be an early signal of the fact that perhaps that massive consumer spending roaring is actually slowing down?